Okay, hello guys. So let's just start to analyze some of the market and try to take some few tricks. Okay, today there is the US bank holiday, so the real markets did not open. So we are going to trade on the OTC market. Okay, so let's just try to see if we can get any good opportunity to take trades. So this USD NGN, this one is in the downtrend, so it is a very trendy market. Okay. So let us see. Okay, the target has been reached, so we don't have any opportunity right now. See the CHF. Okay, so this one, it is in a downtrend. Okay, so the trend is in a downtrend, so the lower low is here, the inducement is here. It has already been mitigated. I think we are going to have some opportunity at this currency pair. Okay, so the market has also mitigated some of the gaps. Okay, gap means liquidity. Okay, so this is the extreme gap, this one is the last gap in this price range, in this swing, so this will be considered as the extreme gap. Okay, so the market is also creating the bearish gap over here. Okay, so which means it is given a sign of the market moving to the downward direction here. So let us see if we can get the opportunity to trade here. Okay, so we have the fair value gap here. Okay, so this is the fair value gap. So if you look at the third candle, it's not good. Okay, so where will be the target here? So the our target will be the swing low, which will be this one. This will be the target. Okay, and then this area can also act as the support level, so we just have to wait for the confirmation here. Okay, so if you look at here, this is the lower low. Okay, this is the lower low. See, the high has been swept, so this will be the inducement, which has already been mitigated. Okay, so below the inducement we have the gap, which has been mitigated, which means the external liquidity has been taken already. Okay, so let us see if we can get the opportunity to trade on this currency pair. The trend is in a downtrend. Okay, so I'm not taking right now the trades because this particular candle, if we see, it's just forming a doji here. So what I want is that this current running candle to swap this mitigation candle and from as the red candle, that would be great. Okay, so let us also see, this can also act as the resistance. Okay, so I'm not taking the trade right now. So this EURGPP, okay, so practically it's going up now. Technically it's in a downtrend. Okay, so see, let us see how the market will rate. If this running candle from as the red candle, then that would be great. But let us see, we still have around 7 seconds. Okay, 5 seconds, so I think it is going to from the red candle here. So, okay, let's go down to the downward direction, but there is a gap down here. Okay, so if the candle came up, then we will place our entry point to the upper side. So but it's going down now. If the candle came to this area, then we'll place one trade. Okay, so but then it is going in our favor right now. Let us see how the candle will behave from here. Okay, and then I will explain after this trade. Okay, so it's going in our favor right now. We still have 9 seconds. 5, 4, 3, 2, 1, and then boom, this is the winning trade. Okay, so here, see, like I have explained earlier, we have the inducement here, we have the fair value gap. So in this win, this is the last fair value gap. This will be the extreme fair value gap. This candle has already taken the liquidity. So this inducement means this is the external liquidity which has been taken already. And then the market is creating the bearish gap, okay. And then see, after creating the bearish gap, the market has mitigated this gap, and then this red candle has swept our previous mitigation candle, forming the IFC candle. So this is the IFC candle. Okay, so we still have the space below. This will be the target over here. We still have lots of room available. That's the reason I placed my trade here, and this is the winning trade. So if you look for the liquidity, the gap, and the target, then you can make a good trade. Okay, so this one, okay, technically it's in a downtrend and practically it's going up. We don't have, okay, so the market has, okay, did not, okay, this target has been reached, breakout. Okay, the next target will be below. Okay, let us see if we can get the opportunity to trade here. Okay, so kind of ranging in this area, so we have to be careful. So the gap is very huge here, so it is recommended that if the candle come and get rejection from the 50%, that will be better. Okay, okay, so we have the, okay, so we also have the resistance. I can also see some resistance here. If it closes below the 50% level, we are going to take one trade to the downward direction. Okay, okay, so this might also form as the green candle, but then we also have the resistance here. So if the candle came up to this area, this will be a good trade. But okay, let us just copy this one. Okay, so this is the target. Okay, this is the first target which has already been breakout. So our next target will be this one. So we still have the room available. So after mitigation, we have placed our pre. And then if you look at here, if you look at here, this high has already been swept. Okay, I think we have the equal high here. Okay, so this equal high has been swept, which means that equal high means there is liquidity. Okay, equal high means there's liquidity. So this particular candle has taken the liquidity already. It has created the bearish gap, but this is a huge gap. So see, even after mitigation, it did not went down. It has also from another green candle, and then it came to the 50% level, and then after that we have taken our break here, and then it is a winning break here. And then if you look at here, okay, it went up, okay, went down, okay, it went up, it went down. So this area can also act as the resistance. Okay, so this is the resistance. We have the gap, okay, the liquidity has been taken, and then technically the trend is in the downtrend. Okay, so this is also the winning trade. Okay, so we have taken two trades so far. Both in the winning trade. Okay, so let us just see how the market will break from this level. Okay, so this area can also act as the support level here. Okay, and then we also have the unmitigated gap here, which means that there is the liquidity over here. Okay, we have the huge imbalance in the price here. If you look at this area, so the price can come up to this gap. Okay, so let us see. The market is creating another bearish gap, indicating that the market wants to move down further. but then because of this support area, we have to wait for the liquidity sweep of the mitigation candle. Or okay, so let us just give another gap here. So it has created a gap, but this is the fair value gap, which means that the fair value gap means we have to wait for the mitigation of the gap. But right after the mitigation, we are not taking the break here. Okay. Okay, this can also be the... Okay. Why is it not moving? Okay, so this is the liquidity area, okay? This is the liquidity level, okay? And this is the support level, so this can be the trap. Okay, so if they... Okay, it has breakout. Okay, why is this? I can just delete this one and then put another one. So it has the breakout, okay? Okay, so it has... Okay, so it is going down right now, so I told that this can be the trap here. We should have been placed our trade here, but then we did not. Okay, no problem about that. So it's getting a good rejection. Let us go down to the downward direction here. Okay, so the candle is in our favor right now, but whatever can happen, trading is all about the probabilities, and then you just have to apply your analysis, your strategy. That's it. You have to accept it if it is a lose or it is a win. So nothing is 100% in the market, and then you have to accept that. So we still have around 10 seconds remaining. Okay, 11, 10. Okay, 7 seconds. Okay, 5 seconds. Okay, so this trade is 50-50. Okay, but then okay, we won the trade here. So let me just explain. Okay, so this is the same currency pair that we have taken the trade earlier. So it has swapped the liquidity, okay, creating the gap, mitigated the bearish gap, and then also created another gap, which means that the market wants to reverse to the downward direction. Okay, so this is the support level. So the pattern here, this will trap the traders. So this is the support level. The market is given a retest. So what the other traders will think is that the market will move up from this level, but however the liquidity has already been taken. It has traded the bearish gap. Okay, it has traded the bearish gap, and then it has also break out this gap. So our next target, this is the liquidity level. Okay, this is the support and this is the liquidity level. So what the market will do is that if it want to move up also, it will go and take the liquidity and then it will move up. So we have taken 3 trades so far. So all 3 in a winning trade. Okay, so see, it is coming up to this unmitigated gap like we have expected. So here, if we look at the market here, NZDCHF, so this is in the upper direction here. This is in the upper direction here. Okay. So let me just... Okay, so the market was ranging in this area Okay, it has a breakout to the upper direction here. So the inducement, okay, we have the higher high here. Okay, so the inducement is here. We don't have the higher high. The inducement did not mitigate it. Okay, let's just forget about that. And then this one, USD okay, so this one in an uptrend. Okay, practically it's going in a downtrend right now. I think we have the change of character here. The higher high is here. Okay, so this will be the inducement mitigation. The break of structure has already happened. Okay, so this level will be the change of character. Okay, so let me just put up some the horizontal line. This level will be the change of character. Let us see if the market has already changed its character. Okay, so we can confirm the change of character here. Lower low, the inducement has been mitigated. We also have the, okay, so see, this is the lower low, breakout with body, lower low is being confirmed. If you take the inducement here, it has been mitigated. This is the extreme fair value gap, which has been already mitigated, and the market is reversing to the downward direction here, creating the bearish gap. Okay, so everything is indicating to the downward direction right now. Okay, so it has, let us also see that this give some gap here. Okay, so it has mitigated the gap. Okay, okay, so we also have the lower low here. Okay, if we get the opportunity, we'll try to take trade, but no opportunity as of now. Okay, so this one is also technically it's in a downtrend. The lower low, the inducement has been mitigated. We have the gap here which has been mitigated. Okay, so this will be the order block. Okay, it has already been mitigated. Okay, so let us see if we have the opportunity here. Okay, so this will be this is the bullish gap, and okay, so we don't have any bearish gap right now. Okay, so even this market, it's in a downtrend. So okay, so this is kind of choppy and we're not taking this market. Okay, so this one is in a very trendy market. We don't have any reference from the left, and then this one creating many gaps. So okay, so it's just stuck in this area. No opportunity has been created. Okay, so see, it has come and mitigated this gap already. So what the market will do is that if the market price wants to go up, it could create the bullish gap and then it will go up. If it wants to go down, it could break this and then create the bearish gap. So let us just wait, because right now we don't have the clear opportunity where the market wants to head. Okay, so let us see here. Okay, so this range has been breakout, and then the market has already mitigated the, okay, so weak order block. I guess we can tag this with SD order block. This will be the first order block after the inducement. So if we look at here, it has been breakout with body, which means that the higher high has been confirmed. So the first pullback, this is the first pullback, so this will be our inducement. Okay, inducement. we have the gap here. So these are the external liquidity. So I think I also have discussed in my last video that if we have in the order block video, if you have this type of long wick, you can also take this as the order block. Okay, so this is the first pullback here below, after the below the inducement. So this will be the decisional order block, which has already been mitigated. So the external liquidity has already been taken, so this will be our break of structure. This is the break of structure. Okay, so if we can get any type of opportunity to the upper direction, we will go to the upper direction, but we don't have any gap here. We also need the gap. Okay, so see, no opportunity. Okay, no opportunity. So patient is the key. You have to be patient. Okay, okay. So here the market is very trendy. Okay, so it is very trendy right now. So it should have come and mitigated the extreme gap. Okay, so that we can take trade. So if the market is very trendy, okay, you can consider taking trade even without mitigating the inducement. Okay, if it comes and mitigated the extreme gap, but we don't have the opportunity as of now. Okay, so here the market is creating the bullish gap. Let us see. Okay, so it has swept this high. This is also the resistance area. Okay, but the market is creating the bullish gap, so let us wait. So far no opportunity here. Okay, CC. So like we have analyzed, after mitigating this gap, the market is creating the bearish gap here. Okay, so let us see if we can get the opportunity here. Okay, so we have the gap here. Okay, this is the gap here. Okay, but okay, this will be the extreme gap. This is the extreme gap here. This, okay, lower low, the inducement mitigated, the extreme gap has been mitigated, creating the bearish gap, created another bearish gap. So far we have taken 3 trades, 3 in a winning. Okay, so if we got the rejection from this gap, we will go to the downward direction. Okay, if there is no rejection, no trade, but if there is rejection, we will try to go to the downward direction here as well. Okay, so we are getting some of the rejection. Okay, no rejection, so we are not going to take trade here. Okay, we can see some bullish gap here, but the market is quite, see, if you see the candle, it's not that good, so it's kind of risky also. We have the gap here. Okay, so this is the gap, and then if we look at, we can just keep some trend line. to look at the resistance. Okay, so this is the target. The market has already reached the target here. So see, no rejection, the price is just moving up. We also have unmitigated gap here, which this one is the extreme gap. So it looks like the market wants to go and mitigate this extreme gap, even though the trend is in a downtrend, straightening the bullish gap here. So this gap did not respect that. If you see here, it has also traded the bullish gap here. Okay, this is the bullish gap, and then it is also trading another bullish gap here. Okay, so we go up on the next candle. Even though the trend is downtrend, we are going to the upper direction here. Okay, but there can be retracement here. It has a huge gap, so no problem. Okay, so we still have around 30 seconds. Let us see. So there's also some space here, because of that the market is also reversing again. Okay, so we lose the break here, so okay, no problem. After mitigation, the candle is going up. Okay, so it's fine. So this is the target, which has already been breakout. This will be the next target. Okay, so but then we have to wait for the mitigation. So see, it has mitigated the extreme gap like we have expected, but we lost on this candle. So see, it has mitigated this extreme gap, and then the price is moving to the upper direction now. Let us see. So this one technically it's downtrend, okay, but then practically it's going up now. So it is mitigated this extreme gap. Okay, let's see if we can find any opportunity here. Let me just delete this gap. Okay, so we have the gap here. Okay, okay, so it did not able to break out this gap. So we have the break gap here, but because of this gap, it's risky to take direct trade here. Okay, so it is not giving us any opportunity. Okay, so see here, the market is going to the downward direction. Okay, so this is the fair value gap. So the lower low, the inducement, okay, swept, okay. So the liquidity has been taken for multiple times. This is the fair value gap. Oh, I can just hear some noise outside. Okay. Okay, so this is the gap here. Okay, we have the gap here. Okay, just a small gap, but this is also the gap. This is also the gap, and then we also have the gap below. Okay, so I just want this candle to come and mitigate this gap, but it doesn't happen. Let us wait for the mitigation. Okay, so in this price, this will be the extreme gap. Okay, in this swing, this will be the extreme gap. So this will be the target number one. This will be the target number one. So we have taken 4 trades, 3 win and 1 lose so far. No mitigation. So this one, okay, so see the target has been breakout. This is the breakout gap. The market is reversing. Okay, we have, okay, small gap. Okay, so let's delete this one. And then mitigated the bullish gap, created another bullish gap. Okay, created another bullish gap. So this will be the target. Let us see, this will be the target here. Okay, so I think, but then the target has already been reached, if I'm not mistaken. Okay, so it has reached the target, so we must have wait for the mitigation of this gap. Okay, so here, if the market price come and mitigate this gap, we will take trade. If not, we will not take trade without the mitigation here. We still have 5 seconds. I want the price to come and mitigate at this 50% level. Okay, so see the price is reversing. This target has been reached. Okay. If this current running candle swept this mitigation low from as a green candle, then we go up, but no opportunity traded as of now. It's directly reversing to the upper direction here. Okay, so it has mitigated this extreme gap, created the bearish gap here. Okay, it has created the bearish gap. It has been mitigated. Okay, well, this is the net entry. So this will be the target over here. This will be the first target. We also have the recent target here. Okay, so this is the sharp turn. This gap. Okay, so it did not break out. Okay, so we can go down on this candle. Okay, so the reason I place my trade is that this extreme gap has already been mitigated. Okay, it has been mitigated. This is the bearish gap. Okay, it has created the bearish gap, and then also, okay, this is the bullish gap. Okay, so this will become the inverse fair value gap. It can also act as the IFVG, and also this is also the sharp turn. If there's gap this side, This is the sharp turn, okay? Turn, okay? U-turn, okay? Sign of reversal. So here, this bullish candle has already mitigated this gap, okay? Which means that, okay, so this is the winning trade. So after the mitigation, this red candle has swept the mitigation candle, okay? And the liquidity has been taken from this gap. So we still have the room available. This is our target. This is our target. So we still have enough space to from one more candle. So we took our trade here. So this is also the winning trade. So we have taken 5 trades so far. We have taken 5 trades, okay? And then for one, and then one loose. Okay, so this will be it for this session, and even the real market did not open. We are just trading on the OTC market, so this will be enough for this session, and I will see you on the next video. So keep supporting, and if you want more of this content, then please like, share, and subscribe. Okay, so thank you. Bye bye.